Listen only mode.
Welcome friends and traders to today's UTP lesson on strategy number 6, and today is Thursday the 6th of April 2017. May I please confirm audio and visual? Do we have sound? Beautiful. Thank you Eric. Thank you Larry. Thank you everybody for joining. Right, I'm just going to open up the Ultimate Traders Package manual. So just give me a quick moment. Let me open up that one. Right, trading strategies. They are page 153. You can find that in your manual as well. Strategy 1, 2, 3. There's 4, 5. There we go. Strategy number 6. Now strategy number 6 is about trading the stochastic RSI in the right buy or sell zone according to the trend inside the ABCD price swing to the D extension with the stops beyond the A. So here's an example. Buy the stochastic RSI in the buy zone. So here we have an up A, B, C, D. The market retraced back inside the AB boundary, bounced at past resistance, becoming future support, and gave us a deep retracement at the 8.6 retracement level. So if I buy over here, I'm going to target the D extension. That's going to be the 1.18 extension, and I'm going to place my stop 10 pips below the A, all right, or 10% of the daily trading range below the A. Here's an example of selling the stochastic RSI in the sell zone. Down A, B, C, D, sell at past support becoming future resistance. Make sure that the stochastic is in the sell zone. Then we can see that this one retraced to the 50 retracement level. Target the actual D extension 10 pips before the market hits the D extension, but place the stop 10 pips above the A high, or 10% of the daily trading range above the A high. Right, are we all on the same page? Just type a Y or yes. Everybody's with me up to this point. Okay, fantastic. Right, here's the nitty-gritty of trading strategy number 6. Right. Once again, it's about trading the stochastic RSI in the right buy or sell zone according to the trend inside the ABCD price swing to the D extension. Now the first step would be to compress the charts to see if the market is in an uptrend or a downtrend. Then find and mark your ABCDs, sub-ABCDs and Fibonacci's on the daily chart and the 2-hour chart. Right, and only trade the strategy in an up or a down push zone or an up or down retracement zone. Now before we move along, let's open up a currency pair. Now in the AOD, I'm looking for a sell on the pound US dollar, so let's have a look at this pound US dollar. And let's apply strategy number 6 on this one. Pound US dollar, open up a daily chart, right? Because the manual says open up a daily, right? Open up a daily. Daily chart. Mark your Fibonacci's on the daily. There's our daily chart. Compress the daily chart. Now we can see here that the market is bearish. Clearly we have a downtrend over here. We are heading down, right? So I'm going to start my trend lines here at that high. So that would be the outer trend line. This would be the inner trend line. And now that we can see the market broke the inner trend line and we're heading towards the outer trend line. Now, let's have a closer look at this picture. Most recently, we can actually see that we have a price pattern on the pound US dollar. The market has been making lower highs and higher lows. Look at that. Who can tell me what price pattern is this? What do we call that? What pattern is this? We have lower highs and we have higher lows. Beautiful. George nailed it. It's a pennant, right? We can even draw this with our triangle pattern tool from the charting software. Look at that. Beautiful. So there's our pennant. Now the market bounced at the pennant, and we could see that the market has been waving inside this pennant like this. Market moves from resistance to support, and then support to resistance, resistance to support, and then support to resistance. Now we have bounced at resistance and we could be heading to support again. Right. Ultimately, I do believe that the market will break that pennant to the upside. And the reason I say this is because the market recently broke it down in a trend line and we're heading towards the outer trend line. Okay, so this is a little bit of an interesting scenario that we find ourselves in on the pound US dollar. So for now, I am just going to trade the pennant. Right, so I want to sell at resistance. And I want to buy at support until the market breaks out of this pennant. So it's sell at resistance, sell at resistance, and then again buy at support and buy at support. Right. Does that make sense? Do you agree that we should be selling resistance and buying support? Robert is asking, what is the range to support over here? The range to support from where we are now is about 290 pips. So I would say we have 290 pips downside potential, right? And that would mean, because we bounced at resistance, we're heading to support, that would mean that the direction of highest probability for now is bearish. Okay, When the market bounces at support, then I'm going to buy it again, and then the direction of highest probability will be bullish again. Okay, let me just make these lines that I use to indicate the wave movements inside the pennant, make them a little bit transparent. Okay, so we're heading down. In fact, the bounce at resistance was confirmed because the market broke an uptrend line to the downside. Beautiful, huh? Broken up trend line to the downside, that confirmed the bounce at resistance. And we also have what appears to be a crown formation. Left tip, center tip, right tip, there's our crown. Type of worry, yes, if you can see the crown. Let me change the color here. You can see that better. Look at that crown formation over there. Left tip, center tip, right tip, there's the crown. Let me make it another color. That's better. Look at that crown over there. You see the crown? Amazing, huh? Market bounced at resistance, broke the uptrend line, and it crowned. And we'll be able to see this crown on the 2-hour chart much better. All right, now let's have a look at the Fibonacci's over here. Let me just take that out. Take this out. Let's have a look at the Fibs. So there's our down AB boundary. We have an A at 1.2614. We have a B at 1.2375. And then the market retraced and made a high of 1.2555. So that's a 618 retracement. Never hit the 786. Came close, but no cigar. So we have a C at the 618. And when the market retraces to the 618, then the D extension will be the 1.618 at 1.2228. So we have a fairly good idea of where the pound US dollar is heading. It's heading to the 1.618 over here. Let me just place a horizontal line over there. 1.2228. There we go. So that will be the D. And that D almost forms a confluence with the triangle support. So I'm pretty sure that when the market hits that D extension, I'm going to stand back, then wait for the market to bounce at support, and then I'm going to buy again. How does that sound like a plan? Trade this one all the way down to the D extension for the next 290 pips, then wait for the market to hit support, and then look for a buy again. How does that sound like a plan? Okay, fantastic, fantastic. Right, so there's our analysis on okay, just got an alert in the pound dollar. Right, so there's our analysis on the daily chart. Now the manual says look at the daily chart, look at the 2-hour chart. So let's go and have a look at the 2-hour. I'm going to open up a 2-hour chart over here. Pound US dollar. Right, so there's the daily chart. On the right hand side we have a pennant. We have down Fibonacci's, we have a down ABCD swing, A, B, C, D. There we go. If you can't see the watermark, let me just type here, this is the daily chart. Okay, now let's go and have a look at the 2-hour chart. Now, we do have an uptrend line that was broken to the downside. So I'm going to draw that uptrend line over here. That one confirmed the bounce at pennant resistance. And now we can see that we have a crown over here. There's our crown formation. Left tip, center tip, right tip, crown. Right. Left tip, center tip, right tip, crown. Beautiful. Okay, now immediately on the 2-hour chart I can see that the stochastic is bearish. And remember, strategy 6 is about looking at that stochastic and making sure that the stochastic is either in the sell zone or at least bearish. So let's go and have a look at these Fibonacci's over here. Right, let's see what we have from the 2-hour Fibonacci's, because that's what the manual says. Let's have a look at the Fibs. And there's our down Fibonacci's. Right. So now we have an A at 1.2595. We have a B at 1.2440. Then the market gave us a super shallow retracement, and that's why it bounced against the 127 extension. After the market bounced against the 127 extension, we saw a substantial retracement back inside the AB boundary, and the market eventually made a U-turn just below the 786. So that means we have a 618 retracement. Okay, so that's where the market retraced as it went to the 618. Now, due to the fact that the market retraced to the 618, the D extension is going to be the 1.618 at 1.2344. Over there. So that will be the 1.618 at 1.2344. So there's the AB. The C is at the 618. And the D extension is going to be the 1.618 over there. Right. Now, first of all, let's just go back to the manual. The manual says only trade this strategy in an up or a down push zone. Well, we have a down push zone. We're heading from the C to the D. We can clearly see that the market already broke a counter trend line on the 2-hour chart, and it just came back to confirm that break. So this would be the counter trend line. Over there. Right. If a signal hits, figure out if the market is moving from the B to the C or the C to the D. You should only be trading in the direction of the C to the D. Also make sure that you're only trading in the active zone. And we are so fortunate that we are trading the London session. So now we are moving from the C to the D. Okay, are we all on the same page? Does everybody agree? We are moving from the C to the D. The market broke a counter trend line. We are heading down. Okay. After you enter, you can draw a 25-degree angle trend line from the most recent low if you're going long, or the most recent high if you're going short. You can align counter trend line breaks with a stochastic RSI at past resistance to become future support, or past support becoming future resistance, anywhere inside the AB boundary or anywhere the market is moving from the projected C to the D, or as it makes sub-ABCDs on the way to the D extension. Now, we already have a down sub-ABCD over here because the market broke the counter trend line. Right, there's a down sub. and what we have here is a 382 retracement. However, the market broke a counter trend line already. Look at that. Broke a counter trend line this morning. There we go. And now it seems like the market is simply coming back to bounce at broken resistance or broken support becoming future resistance. Look at that. We also have past support becoming future resistance over here, right over there. So there's a confluence of resistance where we are now. All right. Let's head back. Now, we are going to go short in the pound dollar. I'm going to go short in the pound dollar. So if the market is in a downtrend, figure out your ABCDs. Your best trades will be if the market is moving from the C to the D. Well, we can see we're heading from the C to the D, right? Great. We're heading from the C to the D. Then, look to sell a downtrend counter trend line break with a stochastic RSI in the sell zone and hopefully a bearish candlestick formation or a bearish 1, 2, 3. Right. Now let's have a look at this. The market broke a counter trend line. So let's answer these few questions. A 1, 2, 3 sell setup. First question. Did the market break the counter trend line? Yes or no? Did the market break the counter trend line? Now focus on this counter trend line over here. Did the market break the counter trend line? Yes or no? Yes, we did. All right. So the answer to that is a resounding yes. The market broke that counter trend line. Let's change that color. Let's make it blue. Yes, the market did. The second question is, and for that we need to go back to the manual. Look to sell a counter trend line break with a stochastic RSI in the sell zone. Right. Is or was the stochastic RSI in the sell zone? Yes or no? There's our stochastic. Look at this one. When the market broke the counter trend line, was that one in the sell zone? Yes or no? Or is it at least bearish? Yes or no? Yes. So that's a resounding yes. Right. Then, and then hopefully a bearish candlestick formation. Right? So the third one is did we get a bearish candlestick formation? Yes or no? Did we? Okay, well have a look at the preceding move over here. Right? Have a look at this candlestick over here. Who can tell me what candlestick formation is that? Okay, so this is a bearish candlestick formation. If you feel unsure, because this one seems like a bearish shooting star. This one over here, a bearish shooting star. That one. Let me place a down arrow over here. If you feel unsure of the candlestick formation, just have a look at the next candle. Just have a look at the next candle. What candle is this? What candle is that? That's also a bearish candlestick formation. What is that? You can tell me, what candlestick formation is that? Robert says it's an evening star. I am a little bit concerned because the preceding candle wasn't a bullish decision candle. If we had something like that, where we had a bullish decision candle, Robert, followed by an indecision candle, and then a bearish candle, then yes, we would have had one. But let's take these two candles over here, and let's go and draw them. So we had a bullish candle like that with a wick, right? And the down wick was shorter than the up wick, right? Something like that. And then we have a look at the next candle over there, and that was a bearish candle like that. And we had a wick to the top like that, something like that, and then a wick to the bottom like that. What candlestick formation is this? You can tell me. What is that? Larry nailed it. Well done, Larry. Doesn't this look like an engulfing candle? Doesn't that look like an engulfing candle? It totally engulfed the previous bullish candle, closed way below it. Can you see that's a bearish engulfing candle? Great stuff, huh? Well done, Eric. All right. So now we have a bearish engulfing candle, and these two candlesticks then would be the candlestick formation. So now we have a bearish engulfing candle, and I am going to place my stop just above that high. Right. So I can't place my stop above the A because it won't fit within my risk reward. But if I have a look at this candlestick formation high, that high was 1.2499. So if I sell right now, then my stop will be 1.2499, which is the candlestick formation high, plus the spread, plus 10% of the daily trading range. Okay. Now, if I right click on the chart and I go to spread info, I can see that the spread is 2 pips. Type of wire yes if you can see that the spread is 2 pips on the pound US dollar. Okay. So the spread is 2. 10% of the daily trading range. Let's see what is the daily trading range. The daily trading range is 100 pips. So 10% of the daily trading range is going to be 10 pips. Right. So that means my stop is going to be 1.2499 plus 2 plus 10. So 2499 plus 2, 2499 plus 2 plus 10 is 2511. So my stop needs to be 2511. Right. Does that make sense? I'm trying to explain it the best way I can, so let me know if there's anything that's unclear. Okay, great. So if I take a sell right now, we can see the market is at 1.2471 because face it, we have a bearish candlestick formation. That need to be a yes. We got a counter trend line break. We got the stochastic RSI in the sell zone. I need to take a sell now. So if I take a sell, the price I'm going to get is 1.2471. That means I'm going to risk 29 pips plus 11. I'm going to risk 40 pips. So 40 pip risk, right? And my target is going to be the D extension, right? Plus 10 pips above the D extension plus the spread. Okay. Because the manual says target exit 10 pips in front of the D extension. So now I'm going to exit 10 pips in front of the D extension. The D extension is going to be the 1.618 over here. There we go. 1.2344. So the D extension is going to be 1.2344 plus 10 pips plus the spread. The spread is going to be 2 pips. So let's work that out. 1.2344 plus 10 plus 2. 2.356. So that target will be 2.356. Okay. So how many pips in reward is that now? 2471 minus 2.356 is 115 pips. 115 pip reward. There we go. Okay. Now if I want to work out the risk reward ratio, I take that 115 pips reward and I divide it by the 40 pip risk and I get to 2.8. So this means I am risking 1 pip to make 2.8 pips. What a pleasure. Right. This trade is good to go. There we go. Good to go. It fits within my risk reward. It's so close to a 3-to-1. I still take it. Okay. And this is strategy number 6 in a nutshell. Okay. Are we all familiar now with strategy number 6? Does it make sense? You're more than welcome to take a screenshot there. Just type a DONE done when you've copied this down. You can click on the camera icon on your GoToWebinar screen, or you can take a screenshot, or you can just write it down. More than welcome. Okay, did you learn something today? Yes, strategy number 6 and strategy number 7 are similar. It's a pleasure there, Larry. I'm glad this lesson was helpful to you, my friend. Okay, everybody, that is strategy number 6 in a nutshell. Thank you for joining. I hope you had a wonderful time during this lesson. I hope you join me in the next session of our Endless on Demand. I am going to take a break, and then I'll see you back at the top of the hour. That's a pleasure there, Tom, my friend. William says, hey, I made last night's lost money back in the 1 hour ZAR today. Okay, nice one there, William. Marina is asking, where can I find the weekly schedule? There is no weekly schedule, Marina. Just ask me and I'll let you know. I see these lessons on a daily basis, the schedule there, Marina. Okay. Right, thank you everybody for joining. Marina, maybe it's a good idea to speak to your account rep. Maybe they'll give you a schedule there. Right, thanks for joining everybody. I'll see you back in the Endless on Demand.